In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But finance is a massive, unregulated, global monopoly now. The committee, thank you for inviting me to testify about crypto and the collapse of FTX. I'm the chairman of O-Shares, an ETF indexing firm, and also a private equity and venture investor. I support entrepreneurs at every stage of their journeys. I have dozens of family-run businesses in our investment portfolios. My extensive social media platform enables me to tell the stories of their products and services to help reduce their customer acquisition costs. It's a model that has worked well for over a decade and helped support so many small American businesses, which create over 60% of the jobs in the American economy. In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, a developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this situation will be discovered by following the transaction trail after obtaining the records. I've applied for membership on the FTX Creditors Committee in connection with the bankruptcy proceedings because I feel obligated to pursue the facts on behalf of all stakeholders and believe my perspective of this situation will be helpful to the other creditor committee members. The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, in the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise had no impact on the long-term potential of American debt and equity markets. I'm only one of many investors that have experienced this loss. However, this changes nothing in terms of the potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. I understand why many leaders in the banking industry are open skeptics, calling for the banning of these new crypto software technologies. Disruption is always uncomfortable at first, and entrenched businesses abhor new competition. But it has been proven time and time again that disruption is absolutely necessary in advancing the economy. There is the risk of investing in crypto, and then there's also the risk of not investing in it and letting others accrue its benefits first, essentially gifting them a competitive advantage that could be very, very hard to recapture. So where to start? We need to clear policy and regulation for the crypto industry, its entrepreneurs, its developers, and its users. Congress should start by passing bipartisan legislation that creates a sensible regulatory framework for digital stablecoins backed by the US dollar. Why? A well-regulated stablecoin backed by the US dollar and other high-quality liquid assets could become the global default payment system over time. The US dollar already denominates the price of oil and other commodities. Why not everything else? What could be more bipartisan than this? Let me close with this. We need to get to the bottom of what happened with FTX, but we can't let its collapse cause us to abandon the great promise and potential of crypto.
Mr. O'Leary, it seems to me that tokens are very often the tool or mechanism to incentivize people to validate and maintain a distributed ledger. Now, you can gamble with them. You can speculate as to what a given token is going to be worth. But it seems to me that underlying blockchain technology is potentially extremely powerful, is actually already being used in a variety of ways. Could you address this notion that the only possible use is a zero-sum gambling enterprise?
No, I don't agree with that at all. It's preposterous to say that. The potential of blockchain technology in authenticating physical assets and contracts and tokens, as you suggest, is incredibly powerful. In fact, I think what's going to happen as we peel the onion on FTX over the next year or two is the shining outcome of the success of the blockchain to track these assets will become the focus of everybody. We will realize every security or token that left FTX, left Alameda, got traded between shareholders, all tracked irrefutably on the blockchain. The power of this technology is very harnessable, very powerful, and of course we should lead the world in it because so much of it is developed here. The hottest hands coming out of MIT right now, where do they want to work? A third of the class. They want to work on the blockchain. You can't take that much potential and not expect extraordinary outcomes. This is a remarkable technology. Yes, it requires regulation, but if you just ask where the hot hands are going, the great engineers, this is where they're going. So, we train them here, and then we kick them out of the country so they do their work somewhere else.
So let me ask you directly. You were an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, "Okay, let's step back. This is a simple case in my mind of where did the money go?" And I said, "Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it?" And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulators' request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX, wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure. It's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grow these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated, global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay.